Guys, welcome back to my real estate YouTube channel. Now, in today's video, we're talking about equity. Four specific ways, four ways I want to show you how to increase equity in your rental properties. Now, why would this be important for you? Well, if you've taken the time out of your day, your busy day, that you could be doing something else right now to watch this video, it shows that you're serious about being a real estate entrepreneur, shows that you're serious about your success as a real estate investor, and it shows you want to make money. That big money that real estate allows you to make, because it's all about the Benjamins, right? This is a modern day gold rush going on. People are trying to get into real estate because they heard that you can make a lot of money, which you can't. So how do we make a lot of money? Well, it's a combination of what we call cash flow, passive income, and equity. Throw the two together, right? And you're now living that dream lifestyle that you've always wanted to have. So what does the cash flow do? The cash flow allows you to quit your job that you hate and no longer have to listen to the boss that you hate. And basically now you can run your own life and nobody's gonna tell you what to do, because say you have a rental property that the total liability on the property is $1,000 a month, but you can rent it for $1,500 a month. Now you're making $500 a month cash flow. Now say you have 10, 20, 30, 40, 50, the more you have, the less people are gonna tell you what to do and the more freedom you have. So cash flow is great as far as creating freedom in your life, but will it create that generational wealth that you pass down to your children and your children's children to be that great-great-grandpa that the great-great-grandchildren always talk about? Oh, my great-great-grandpappy, he's the best, right? So how do we do this? We create equity. Equity is what's gonna basically build wealth for our generational line. And how do we do that? Well, I'm gonna show you 4 different ways to do that in today's video. So the first way you can increase equity in your rental properties is to buy them right. So when you buy them, if you buy them right, you can buy and get instant equity. So, if you're good at what you do as a real estate investor and you're good at direct to seller off-market marketing, where you're finding motivated sellers through postcards, internet marketing, signs, flyers, whatever you're doing, you can find really deeply discounted properties. Now, specifically, one coming to my mind right now is one that I bought in Keller, Texas a couple years ago. This house was perfect. I mean, you walked in, it was a split landing, double stairs going up. I mean, it had a huge walk-in closet, travertine marble. Guys, this house didn't need anything. We didn't touch it. And I probably should have moved into it myself. That's how nice it was, but I didn't. And I went ahead and sold the house because I got a little bit greedy, which is hard to, basically refrain from not selling a house that you want. But when you get a big check, you're kind of like, I'm gonna go that way. And you're looking short term. So that's what happened when I sold this house. But when I bought this house, I pulled cash out of my pocket and handed it to the lady that owned the house. Well, not out of my pocket, out of someone else's pocket, because remember, as successful real estate investors, we use OPM. We borrow other people's money and we buy the house, we pay them an interest rate in return, so we don't have to leverage our own capital if we can use someone else's. And so I gave the money to the woman, she gave me the house. Now when I got the house, it was appraised for over $100,000 more than the amount of money that I had given her for that house. So what did I do? I created instant equity by buying right. Now, this is the quickest, easiest way to create mega wealth, is to buy a bunch of houses right with instant equity in the deal. Now, is there a harder way to get that equity? Yes, there is, but can you make a lot of it? Absolutely, I'm gonna show you how. So the second way, guys, is to rehab a house and to force the appreciation up. So we're looking at forced appreciation. So let's say we buy a house for $100,000 and it's appraised at, I don't know, $100,000, $500,000, $10,000. Is that a good deal? No, it's not. But if it needs a lot of work and you're gonna update the kitchen, update the bathrooms, and put granite and hardwood floors in the house, and let's say you put in, I don't know, $30,000 in the house and now it's worth $175,000, you push the equity value up, and now you've created equity through rehabbing a house and forcing the value of the property up. And that's a second way that you can create equity in a house by knowing what you're doing as a real estate investor. You see this on HGTV. This is what rehabbers are doing all the time. And then we sell that house to a retail buyer, or we keep it and finance it out and keep it as a rental property with that leverage position of a good equity spread in that deal. Now, what's the third way we want to add equity to a property? We have a third party pay down. Third party pay down. What does that mean? Well, when I buy a house and I put a tenant in there, that is a third party to me. I'm not the one buying the house. They're paying the mortgage down every month, and there's a principal part of that payment. So you have principal and interest, right? They're paying down the principal part, so every single month, my principal balance on that property is going down and down and down, and that third party is increasing the equity in the properties that I own. So if I have a bunch of houses and a bunch of people are going out every single day to a job they don't like, to work for a check, to come back and pay me $400 or $500 a month to pay down my houses and buy my houses for me, they're creating equity in my houses for me. And it's a third party individual doing it, and I'm not doing it myself, right? So that's the third way. And the fourth way is natural appreciation. So we already talked about forced appreciation by buying a house at a discount that needs work, rehabbing it, pushing it up. But we have what we call natural appreciation. And that's happening big time in my market, Dallas-Fort Worth, and has been for 5-6 years now. In a lot of markets around the country, when the market value goes up, what does that mean? That means your equity level splitting. You're getting your pay down from the third party pay down, but you're also having a spread going up because equity levels are increasing. Now, why does an equity level increase and why do prices go up? Because areas are high in demand. There's a lot of people moving in the same area. So look at it like this. There's, say, a minnow inside a tank, and there's 10 big fish trying to get to that minnow. That minnow's life is now worth a lot more, and they're gonna fight a lot harder to get it. So more people fighting for the same house, higher value, more equity in the property for yourself. So guys, that's it. Those are the 4 main ways that you can really increase your equity in properties. You can basically buy them right to start, buy them at a discount with needing work, do that work, do it well, force the appreciation up. You can basically have a third party pay it down through owning rental properties, and you can basically ride the wave, that millionaire maker wave, if you buy the house at the bottom of the market and ride it up through natural appreciation. So guys, I want to point out that we are at like 990 some subscribers today. So tomorrow we will break 1,000. Remember, you have to be opted into InvestorArmy.com. You have to be subscribed to be able to win one of all these prizes we're giving out tomorrow, and we will be doing so tomorrow. So subscribe to the channel. If you like today's video, share it around. I'll see you on the next one. Have a good day.